Welcome to Act Work on Connected to India, a show where we cover ideas, CEOs, entertainers, and even concepts at work. In this podcast, we look at investments in real estate at work, with a special focus on the real estate market in the United Kingdom. Now, investment in real estate can be done directly in properties as well as real estate bonds. To discuss this very interesting topic and how do you make your debut in investing in real estate in the United Kingdom, I have my guests, Richard Lowe, CEO of Turnkey Investments, a company headquartered in Singapore with expertise in selling and marketing properties in the UK. From Bombay, I'm joined by Abbas Zawariwala, Senior Director and Head of Direct Access at Khaitan Legal Associates, a company headquartered in Delhi with offices in Bengaluru, Mumbai, and London. Gentlemen, welcome to At Work.
Hello, thank you, and good evening.
Thank you, Himanshu.
Great to have both of you. Richard, I'm going to start by you. Very recently, off late, we've seen a big jump in interest in investments in UK. Why has that happened?
Well, I think the UK has proved to be a very stable, safe haven place to invest. I think for people in India and here in Singapore, many people have traveled there, studied there, been on holiday there. So it's a place that I feel people are comfortable in to invest.
And Abbas, if you look at Indians across the world, real estate is one of our favorite asset classes. But I've been away from India for almost a decade and a half. I want to ask, has that changed? Do Indians still like real estate a lot?
No, spot on, Himanshu. Real estate continues to be an aspirational asset class for Indians. It's considered to be a sign of stability and wealth and prosperity. So definitely real estate will remain in vogue for Indians. I can say what has changed is the approach to the real estate investment. One change which I do see is that Indians prefer to acquire real estate, which is quality real estate in the sense that they get better quality lifestyle, and also it should have the potential to appreciate. The other marked change, and that's very relevant for the topic of this discussion, is the fact that Indians are increasingly investing outside India. Real estate investments outside India have grown multifold, and UK has turned out to be one of the top destinations.
Coming to you, Richard, tell us, are there any specific areas in UK which you are marketing right now? Give us some specifics in terms of what Turnkey is selling.
Sure. Well, actually, we cover many of the cities across the UK. Probably the most popular for people who've never invested in the UK would be London. It's probably the city that most people have been to. But we also cover secondary cities like Birmingham and Manchester.
Could you tell us a bit about the preparation, the due diligence and things one has to do to be on the right side of regulators in India as well as in the UK?
As you sort of indicated, Indian regulations play an important role in terms of deciding how and what kind of real estate investment can be made. India has its own exchange control regulations, which we call FEMA. And those rules differ for depending on who is purchasing the property. So, for instance, if a resident Indian wants to make that investment, the limited amount that can be remitted is about 250,000 US dollars, which is quite nominal. So, at times you need to structure the investment in a manner that maybe your family jointly purchases the property, or these limits don't apply traditionally for Indian businesses making business asset purchases overseas. Mm-hmm. So you need to consider the FEMA implications to determine what structure works best for the investor, and then decide how much money you can send abroad. And I may like to add that in addition to FEMA, you also need to look at the income tax implications in India. So these are the factors that will determine the property purchase.
Just make it a bit simple for a layman. I like a property in London. It's going to cost £500,000. So on this number of £500,000, what will the steps look like? What areas should one be considering?
So if it's, say, two people in the family pooling money together, then maybe they could. Well, as I mentioned, the limit is $250,000, and that may not cover the pound investment. So you may need to look at, say, a third member in the family to sort of make that investment jointly. So you could have, say, three people from India making that investment or the remittance for purchasing that. But say if the if say there's no other person to do that, then you're probably looking at a structure being set up in India of a limited liability partnership or an Indian company, which is then investing into, say, a UK company, which can then invest in the UK property. But what needs to be considered is that the property should be a business asset and not just a real estate investment from a holding purpose.
Okay. And what kind of tax implication does an Indian resident have on this?
Oh boy, tax obviously is something that would require a very detailed answer, but I'll try to keep it short. So, see, an Indian resident making an investment under the normal route, which is called the liberalized remittance scheme, needs to pay an upfront 20% tax on the investment or the remittance amount. Now, this tax is not a final tax; it's adjustable and creditable against the final liability. But you'll appreciate that it impacts the amount of funds which are available for the investment. So typically, the way to mitigate this implication is that instead of an Indian individual making this investment, you could have an Indian business entity, an LLP or an Indian company making this investment as a business asset purchase. Now, while obviously the tax may get mitigated, the 20% tax, you will have to be mindful that the way you structure the property purchase will also determine the nature of income that you will make from the UK property.
Okay.
So if it's rental income or it's dividend income or it's interest, say on a bond or say your capital gain, depending on whatever is the whoever is earning that in the UK, when it's upstream to India, the Indian resident should get a tax credit for the taxes that has been paid in the UK. So this needs to be properly structured. There are certain tax return forms that need to be filed to claim these credits. And also due disclosures would have to be made in the Indian income tax forms that you hold such assets.
Okay. Thanks for that. Since we are speaking about, you mentioned bonds and you mentioned some numbers. So Richard, I'm going to come to you. You also market a specific bond which is linked with real estate. One, could you tell us a bit more about it? And could you give us an idea of the properties which Turnkey is marketing? What sort of investment are we looking at? Like London, how much would a property cost? And Birmingham and Liverpool, some of the cities you mentioned.
Let's start with the second question.
When it comes to traditional real estate investment, we work with one of the leading companies called API Global. They have a wide variety of stock across the UK. For example, in South London, Croydon, properties start from just £420,000. In South Greenwich, London, those properties start from just over £427,000. And in Manchester, a development called City Gardens, 2-bedroom units start from just over £263,000. And in prime central Birmingham, a development called Cliveland House, starting from £262,000.
When it comes to the bonds, basically I used to do a lot of fundraising for developers, and as an alternative way to raise financing, certain developers go to the market and issue bonds with private investors. And this is an alternative way to invest into real estate without actually owning the underlying asset.
So the bonds Turnkey Investments are linked with are the bonds issued by the 79th Luxury Living Group, a UK developer with over 30 years of experience and run by the Webster family.
And for some people, they prefer that because these bonds are just a one-year term, pay a very attractive rate of return of between 12 to 17% with interest paid on a regular basis, and has security by way of a first charge on the actual development. So for people who would like to invest in a different strategy on a shorter term basis, these bonds have proved very popular.
Yeah, interesting. And did you say there is a minimum entry point for these bonds?
Yes. The entry level for the bond at the moment that's available is £10,000.
How many lakhs will that translate into a bus? 10,000 pounds?
So on an average, it would be 10 lakhs, about £1 million.
So for an Indian resident or Indian citizen to invest in that kind of money, Richard, what sort of guarantee does this company provide that the investment will be safe and sound?
First of all, this is a fixed income product. So contractually, if you choose to take, let's say, a 15% annualized return, that's how much you will get. If in the very unlikely scenario there were a default, then there is security by way of a first charge on the development. And that's administered by a regulated company called a security trustee. They hold the title deed to the development, and they basically represent the interests of the investors. So again, if there were a default, then the security trustee can step in, repossess the development, and sell it off to recover the capital for the investors.
And how long has this company been around, the bonds?
Well, the family running the development company have been around for over 30 years. They've got an excellent track record. Since they've been raising and issuing bonds about 6 years ago, they've never defaulted. I've invested personally as well and had many clients who have been extremely happy. And we have about an 80 to 90% renewal rate at the end of the 1 year. Investors see that it's working and frequently increase their allocation, and sometimes have done 3, 4, 5 investments.
So what are the mortgage options available for Indians out of India to invest in property in the UK? And in case if people were to look for financing options outside, Richard, to you, are there some options which your company also provides? Abbas, you first.
I think what's important to note is that under the FEMA rules, it's very difficult for an Indian resident to raise a borrowing to make an investment in an overseas property, or even for the matter for purchasing bonds. So if, as I mentioned earlier, that if there is any sort of higher limit that needs to be utilized, or there is a borrowing which is a must in the structure, then you'll probably have to look at a UK group entity in the structure, or maybe a non-resident person in the family taking that borrowing and owning the property.
Okay.
Yes, but otherwise there are limitations under FEMA.
Richard, the mortgage options available?
Yes, it's a very common question because getting access to financing is a key part of real estate investment, especially if you're buying a property in the bricks and mortar. So we work with various mortgage brokers, and they specialize in providing finance mortgages for non-residents of the UK. There are literally hundreds of banks that lend in the UK. Some of them are more favorable to working with non-residents. So what we can do is we can put you in touch with a mortgage broker. They will typically ask you to fill out a form, get us a rudimentary understanding of your financial profile, and usually within 1 working week, they will come back to you with, are you eligible for a mortgage? And if so, even providing what we call an approval in principle to give you some level of peace of mind that you can access financing in the UK. We are starting to see interest rates starting to come down again. For a non-resident, you would be looking really at the moment, today's rates, somewhere between 5, 6, 7%, depending on whether you were looking for a fixed rate or a variable rate.
Richard, we haven't touched on a very, very important area, which is of interest to every investor, is tell us a bit about returns on real estate investment in the UK. What kind of returns have people got?
That really, if we define the return as the return on investment, so how much cash are we putting as a deposit? And then when we sell the property, how much, is the return on the cash that we've put in? So generally, if you are investing and you want to increase your return on investment, or ROI, we would generally recommend to actually take some leverage or take some mortgage financing, because by leveraging your money, you will typically get a better return on investment. So if I was to use a 65% loan, so roughly 2/3 loan, 1/3 deposit or equity, typically in the UK over a 10-year period, we've been looking at about 120 to 180% return over 10 years. So if we annualize that, somewhere between a 12 to 18%. So actually quite similar annualized returns compared with the bond I was saying earlier.
That sounds like really good. And have there been studies which your firm has done over the last few decades to corroborate and back that data?
Absolutely. One of the things that the UK has is a record of all transacted prices in the UK. We keep clear records of what the average house price is in the UK, in London. And just to give you one example, I was doing a presentation a couple of days ago, and one of the slides I have, believe it or not, the average price of a property in Greater London in 1980 was just £15,000. Today, that's about £527,000. So we can see over the long term, and this applies to London and across the UK, it's not a market where you're going to become a millionaire overnight. You're not going to be doubling your money within a year. But if you have time in the market, data shows that over the time, it's a very consistent market that will make money.
Got it. Last question to you, Abbas. Are there any other costs investors need to consider before they venture into investing in UK?
So, Himanshu, I think very valid question. And what investors will typically be looking out for are the costs that they will incur in UK. So, for instance, the stamp duty purchase that they need to pay. I understand that there's an SGT tax there. Plus, there could be the local council or property taxes that need to be paid on an annual basis. In addition to that, the income tax that they may be subjected to in the UK on the return that they make from their property or from their bond. These are typically some of the costs. They should ideally get a credit in India for the UK income taxes. But yes, if the UK taxes are in excess of the Indian taxes, then that's a cost that they need to consider.
Okay. Thank you very much for that, Abbas and Richard. Clearly, it's a topic which will require to get deeper into and take some more time to understand. But the input we've got from both of you really, helps in understanding what are the basics and how does one start. So thank you very much for that.
Lovely. Thank you. And lovely to be on the panel tonight. Thank you, Himanshu.
Thank you, Himanshu. Absolute pleasure.
It was really interesting listening to Richard and Abbas de-layer such a complicated topic. Now, the good news is, ladies and gentlemen, that both of them will be speakers in a special event Connected to India is organizing on the 4th of April in Delhi. If you're interested in visiting and attending that event, you can email us at info@connectedtoindia.com. Additionally, if you have any questions on specific properties which are available in London and all the other cities Richard mentioned, or want some clarifications on tax matters when it comes to Indian citizens looking for investment in UK, you can email us on the same email ID, info@connectedtoindia.com. Thank you very much for watching.